Welcome to another episode of Bulls, Bears, and Blockchain on Revolution Radio, making smarter financial decisions with your host, Rob Nelson, former Fox News host and anchor at Roundtable Media with his team of market masters, Marc LoPresti, Managing Director of Moneta Advisory Partners, co-founder of Battlefin, leading data platform, and a former institutional equities trader at Lehman Brothers, Alex Mascioli, founder of Trade the Chain, former head of institutional prime brokerage at Bquant, John Najarian, co-founder of Market Rebellion, former co-host of Halftime Report on CNBC, and co-founder of Option Monster and Trade Monster. Daily data insights and ticker updates direct from three of the world's top TradFi, legal, and crypto experts on Bulls, Bears, and Blockchain every Monday and Friday on all your favorite platforms. Let's get started.
Good morning, good afternoon, good evening, depending on where you are and when you're listening. This is Revolution Radio's Bulls, Bears, and Blockchain. I'm Rob Nelson, and I'm joined by my team of market masters, John, Marc, and Alex. You listen to hear the smart moves to make, and we're here to deliver just that. Great insights and info in half an hour. All right, good to see you guys. John is en route to Madrid, but we've got him just for a minute. Alex, good to see you. Marc LoPresti, good to see you. Listen, top of everyone's mind is what's going on with Silvergate right now. Marc, I'm sure you can attest to that. You just got off a stage at a big conference where it came up. And Alex, I'm sure it's been all over your brain. Let me get John in before he jumps on a plane. So, obviously, Marc, give us a quick setup here. What's happening with Silvergate is a huge, huge deal. If you're at a conference, it's all everyone's talking about.
Yeah, well, I'm at the Digital Asset Leadership Summit here in New York City that is run by our friends at Hedge Week. And it is definitely front of mind for everyone as Coinbase, Galaxy, and Paxos all stop accepting transfers from Silvergate against the backdrop of a precipitous decline in the stock price, an announcement that they're being investigated by the Justice Department. It's a mess, and there's a lot of concern about A, contagion, and B, the potential, if not apparent, departure of arguably the leading bank for crypto participants, hedge funds, and other professional market participants, particularly here in the United States. It's a big deal.
Yep. And John, let me bring you into this, and then we'll jump to Alex, our crypto master, who's been talking about this stuff before anyone else was thinking about it. And Binance perhaps doing something shady. It's nothing proven yet, but doing a similar FTX kind of thing with depositors' money is also an issue. So, John, quick thoughts before you take off.
Yeah, Rob, there are some really bizarre things going on, obviously, in the crypto space in particular. And one of those things is, of course, Silvergate, which was a big bank that used to turn fiat into crypto, basically Bitcoin, and then people would take that, and that's like the entry product for an awful lot of these other exchanges where you can jump into whatever else you'd like, whether it's Ethereum or any of the other protocols that are out there, XRP, Binance, USDT, or whatever. Anyway, because of that severe sell-off there and the constant rumors out there that Binance has pulled some shenanigans, and those are rumors, and I suspect those rumors by shorts in those particular Binance BNB to the US dollar trades. I think overall what we could be seeing here is a lot of the firms that are exposed to what goes on with crypto, like Coinbase, of course, seeing some pretty significant pressure again. On this particular day, Thursday, we only saw Coinbase slip by about 3%. But if you look at where it's come in the last month, it's been just, horrible for Coinbase shareholders, down from like 84 to 62 in a month. And today I'll note for you that Marathon, MARA, is also moving to the downside pretty fast, down 3.5%. But wow, when I look at the unusual activity, 35,000 of the next Friday, the 10th of March, 550 puts were really actively bought, and 35,000 is a big trade, no matter how you slice it, folks. That's 3.5 million shares short. So worth paying attention to. And as I jump on the flight here to Madrid, I just wanted to share that with you and the rest of the crew. So thank you, Rob, Mark, and Alex, and I will talk to you guys from Madrid.
Thanks, John. Have a great flight. Alex, let's just pick up on that, right? You've been saying you've worried about a crisis in the crypto banking community for a long time. John's point that Silvergate was really a big on-ramp for fiat to crypto. And whether what's true with Binance is true, or whether what is Binance or is Binance not up to no good, it's creating a crisis that goes beyond just Silvergate.
Yeah, I'm not going to comment on what's going on with Binance. They do have a fairly complex, simple to them, but complex to the understanding of a lot of people on how they do conversions on and off. So I'm waiting to hear the full story and the reserves on how that comes out. But talking to Silvergate, listen, this is something that's been on my radar for a couple months now. I mentioned at the beginning of the show, capital efficiencies are what is absolutely required to make the market work at this present age. Do we all wish that we could just trade in crypto and USDC or USDT and accept that? No, people actually do need to go off ramp to fiat, on ramp to crypto. So Silvergate came out as a big resource to the on-off ramps of crypto. On the institutional side, in my days there, the SEN network was the largest network throughout all the hedge funds, throughout all the institutions. It was the quickest, most seamless route in order to move fiat on and off of the cryptoverse. They did onshore, they did offshore. You have other banks like Signature that do onshore, offshore. You have other banks like Metropolitan, which only do onshore. You don't have a lot of choices. And you also have to remember that through banking regulation on the federal and state level, you have balance sheet requirements. And when you have smaller banks such as Metropolitan or smaller banks such as Signature, threshold for the overnights and keeping crypto asset clients on there is very small. So you can't take everybody on. You're limited to the amount you can take on. Silvergate came out as a disruptor in the space, had an international network set up with the SEN network. What is happening right now is sad. I think it's going to break a lot of people in how they operate in the cryptoverse. The stock price, as Mark will tell everybody, is down tremendously. If you were a short seller, you're the biggest winner of it. But I think overall, if this bank collapses because of the FTX contagion, and that's what it is, don't misconstrue it. They have the largest amount of deposits in there. If this bank collapses, it's going to be a sad day in crypto, and we have yet to be. We're going to be set back all over again a couple of years, because I will tell you, on the institutional side, we fought for 3 to 4 years to get as many banks as we could to adopt the crypto customer. And so this is just a sad day for everybody.
Mark, crypto just keeps getting hit. Alex making the point, this literally could be set us back 4 years. Thoughts on that? But also, you and I have talked before about what crypto banks need to be doing. And they sometimes try to do too much instead of just doing the fundamentals and doing the fundamentals right. Is there any positive reckoning in this, or is, your thoughts sort of in general to that?
No, I don't view this as something that'll be a catalyst for positive reckoning. Unfortunately, I try to rationalize some of the tide leaving the beach and showing, whoever's left standing, whenever the expression is there, as a positive evolution in a space. I've spent the day, it'll spend the rest of the evening here with a room full of some of the biggest crypto asset managers, particularly US-based crypto asset managers. And there are really two options, right? And Alex just mentioned them, Silvergate and Signature. We're already hearing rumors, and I don't think they're rumors, of Signature kicking clients off the platform. As you can imagine, Alex, they're probably the smaller, less fee-paying guys that aren't worth the risk. So if we wind up in a situation where professional money managers in crypto have no U.S. banking solution, that could be a real When I say real serious problem, I mean, you could be looking at shutting down of the professional crypto money managers, which means they have to sell their positions. And let's just cut to the chase about what that would mean. That could mean another big gap down. And I don't just mean in the altcoin space. I could be talking Ethereum. I could be talking Bitcoin. We're watching this very carefully. And listen, you guys know me well enough to know I don't like crying wolf. I am a bull more so than a bear. I'm an optimist more so than a pessimist. Sometimes it's why I lose money, and I do lose money sometimes, just like everybody else. This is a serious concern. Real serious concern.
Rob, I want to jump in here real quick. I mean, Mark is saying everything that's true out there, and he has his boots on the ground with the money managers right now as this is breaking. I actually, from being in the business, when on the institutional side, we launched about 30% between 2017 and 2019 of the world's crypto hedge funds as an administrator and a prime broker. I am thinking that if there is no solution to be had and the Send network goes down, we stand a chance unless there is a radical, change and something comes in and saves the day. We'll lose 25 to 50% of professional crypto funds and money managers because of this. It's a crisis that is going to be unlike no other. You're going to lose liquidity. You're going to lose trading volume in the markets. It's going to be catastrophic. I really cannot point this out. It's a crypto banking crisis at this point.
So I'm guessing that is not a good sign for Bitcoin either, or Ethereum, right? I mean, there'll be a spillover to those currencies or not. I mean, I guess there would be, right? Like we're probably going to see a dip.
Rob, if these professional money managers can't do business, what are they going to do? They have to sell the assets off. I mean, it's really kind of that simple.
Okay.
The only catalyst that I could see where this changes the narrative at this point is if money managers literally explain to their LPs, which will be very difficult to do because a lot of them, the money people tend to be boomers who are LPs in these type of funds, is if they explain to them that we have to go crypto native, and that's going to be a difficult story to sell. And the only way you'd ever be able to execute it is in DeFi, but I don't think it's a plausible strategy. I think I'm just dreaming at this point.
Yeah, Mark.
And I see Mark mentioning exactly what that is.
That's great, Alex. But if that's not your strategy, then that doesn't work. Number one. Number two, I don't know how you comply with the regulation that any manager above $150 million here in the United States, that means they have to be a registered investment advisor. By the way, even if you're an exempt investment advisor below 150 million and meeting the state level exemption requirements, and I'm sorry to take the lawyer hat out of the closet and put it on, but just when I thought it was out, they dragged me back in. You can't comply with the rules. You have the U.S. bank regulated counterparty. You've already got the SEC with a proposal on the table right now to change the game on what constitutes a qualified custodian in this industry. We don't have a U.S. bank that's actually willing. You tell me, Alex, you and I have known each other a long time. Our listeners don't know this, but, you and I used to work together in hedge fund land and TradFi land for years. Do you remember how hard it was to get regular TradFi hedge funds bank accounts sometimes because the banks don't want the risk? You're not enough money. Charge you $1,000 for a wire, all this crazy horse. And if Signature winds up as the only game in town in the U.S., they're not going to take all those managers. They don't have custody.
Mark is absolutely right. And I'll tell you the game. I'm going to break my silence right now. I'll tell you the game that was played from 2017 to 2021. And as a prime broker and administrator, this is one of the key services we had to do when launching a crypto hedge fund. And that is our relationships with the three primary U.S. banking entities were so tight, spent more money on dining and drinking with them than anybody else because we could only open up bank accounts for our clients based on our referrals. And Mark knows this. And if, back then, probably, going to be during this year too, the average crypto hedge fund launch was between $3.5 and $8 million. Did you get outliers? Yeah, you did. But that was the average. And the banks wanted $100,000 a year in guaranteed fees, which those funds couldn't offer. So you better be palm pressing your way to opening an account for these managers, or they weren't going to get it. And that's the straight truth.
And by the way, who was the number one bank that we went to then for TradFi and is still there for the crypto, at least thus far, has been Signature.
Yep,
Right?
Signature Bank, and they've taken a huge risk.
Yep.
Yeah, they've taken huge risk. And Signature, to Mark's point, the reason being Signature has grown so exponentially over the years. They were a small private bank in the tri-state area. They've grown exponentially over the years. The feds only allow about 5 to 8.5% of their total deposits on the overnights to be in crypto, and they have to be heavily risk hedged. You do that, so
Yeah,
it's not easy.
And by the way, all of this, and not to just pour salt onto the open wound, but all of this also against the backdrop of the August notice from the Fed to all U.S. chartered banks, right, operating on the Fed system, saying, you better watch your ass if you're in crypto. You need to come up with additional policies and procedures. You need to come up with additional parameters from a risk perspective to determine, your balance sheet strength, right? Because we don't want to have another savings and loan crisis. We don't want to have another banking crisis where we've got, banks that their balance sheets are heavily weighed down with illiquid assets that are not priced properly, because then you wind up with contagion in banking in general. And the Fed does not want that. I have no idea how this is going to end, but I'm really worried.
Mark, that blanket approval for banks to have custodianship over Bitcoin, that came out a couple of years ago that you just spoke of, was a big deal. And it was like, and everybody was like, oh, JP Morgan, Wells Fargo, everybody's going to custody our Bitcoin. Of course they're not. We have stress tests put in place for banks with federal charters, and that's happened since 2008. And let me tell you how a stress test works when a bank actually passes one. Usually takes them 2 to 3 tries, and we're talking about the bulge bracket, the top 5, is that they have to liquidate their least profitable or most riskiest businesses. So if they're in investment banking or hedge fund base, it's prime brokerage, it's equity trading desk. Well, guess what it's going to be first every single time? It's going to be their crypto customers, because that's where the greatest risk is.
So this is obviously, look, we're spending a lot of time on this because this is truly it's like today, it's breaking news, right? Coinbase Global and Galaxy Digital, for you people just tuning in, dropping Silvergate Capital as their banking partner after their filing raised questions about whether Silvergate could stay in business. Quick thing before we move on, Alex and Mark as well, to our investors listening, is there a smart short-term move here? Do you sell Bitcoin off right now? Do you hold? What do you do that's an actual market move that somebody could make right now that's smart?
Well, before I say anything, I definitely am interested in what Mark thinks. He's the one at the conference right now. He has the pros talking to him. I wanted to see what he's been hearing.
Well, what's interesting is that the pros, since a lot of their LPs are in the audience, are not on these panels, are not publicly sounding the alarm as loudly as I am in more hushed conversations in the hallway. We've got the cocktail party starting in about a half an hour. I'm going to be very curious to see what intel I can garner after a couple of whiskey sours. But these guys are definitely concerned, and they should be. It would really be a shame if there's not some solution. But Rob, we can't do a show just on.
Before we go, I just want one piece of market takeaway advice. If you're somebody listening to this,
I'm bearish crypto from top to bottom.
Bearish crypto, Alex?
Yeah, I'm going to be bearish as well. I see trading volumes going down, and I'll touch upon that when I do the recap.
And Alex, I knew you're going to be watching the whale wallets, right, to see stuff coming on chain to sell.
100%, and I have a 2-second tidbit on that when I do the overview, but yeah.
Let's jump into your overview, but let me ask you, as you start that out, does the surge in NFT sales, there was a surge like 2 billion in February, highest since the Terra crash. Is that a silver lining here?
No, I don't think it is, actually. I think the renewed interest in NFTs and the amount of volume that's been trading on OpenSea and other exchange venues, and the whole Blur, coming into the market with their aggregate thing. I think it is the final, and people are going to call me crazy, I think it's the final pump of what I call NFT V1. And I think it's only going to be the quality narratives that were in the V1 phase, which is all of last year, and the second half of 2021 as we start to go into the V2 phase of what I call NFTs, which is we've gone through the test net. Now we're actually going to we're going to take the quality projects from V1 and we're going to start implementing new projects which actually have more utility and have more meaning to what NFTs are. So I think this might be the last hurrah for the majority projects in NFTs. I would say plus 90% if I had to count.
Utility, utility, utility. We're going to keep saying it. With NFTs, there better be utility. Give me a 60-second quick crypto update.
Absolutely. So here's what we got. We got the total market cap of crypto at 1.07 trillion. If you've been listening to the show, that's going to be the same number, more or less. I've repeated every single week for the last 3 weeks. Bitcoin's sitting at about 23,430. It's not moving. We're down 4.49% for the day, and the trade to change sentiment score is neutral at 47 out of 100. Ethereum 1640, same, down 0.62, but the trade to change sentiment score is up big, 81 out of 100. So we're watching for possible action. I will say that for the TCC hottest on Twitter, we have ticker BNB as a standout, up 352% with the price nearly unchanged for the day. So we're keeping an eye out on that one, see if there's any price action movement or any big breaking stories. This has nothing to do with BUSD or the rehypothecation of the 1.8 billion that's been going around on the Binance exchange. Lastly, over the last 24 hours, we were seeing stablecoin exchange net outflows decently surpassing inflows, which is telling me that going into this weekend, we're going to see lower crypto trading volumes and possibly less volatility. So, and that might be, a definite runoff of what's happening, what we discussed in the news, as well as, a couple other things. But right now, stable coins are moving off exchanges.
I love how Alex does that. It is like literally like I'm getting the sports report. Like I got the highlights of the whole day. I absolutely love it.
Question though, Rob, and I'm going to make it really quick because I know we're running out of time already. But Alex, moving assets off chain does not typically is not a bearish indicator, right? It does because you got to move it on chain to sell it. So explain that. Like, just help our audience understand why, because that would seem to be intuitively contradictory.
Yeah, absolutely. So if you have a huge amount, an outweighted size of stable coins in that inflows going into exchanges, that means people are arming their pellet guns ready to either buy or sell, right? So you're looking for a lot of volume. You're looking at a lot of volatility. What we're seeing here is a lot of people taking profits, moving them into stable coins, moving their money to the sidelines, and they're now more people taking off exchanges than putting it on. So for me, that's going to say we're going to have less volume going into the weekend and possibly less volatility. But to me, Mark, I think that's a lot of profit takers taking their money and putting into digital dollars over the last run up over the 4 weeks.
Great answer. Great question, by the way, Mark. Great. Listening to you two is awesome. Mark, let me switch it over to you for a sec as we are getting to the end of the show. Quick, when you're looking at, kind of the big picture on the markets, I want to ask you through this, consumer savings are really a big deal. And what we're finding is new data shows that people are saving less and less and less of their income. During COVID, it was like 30%. Now I'm hearing it's as low as 3%. What does that mean? What is that telling us about what's going on?
Yeah, I mean, and in fact, Robin, we covered this on a show, Bulls, Bears, and Blockchain show a few weeks ago, that on an inflation-adjusted basis, right, what the value is of $1, the consumer savings rate is actually among the lowest it's been in like 50 years, right? I mean, that's really, really scary. What does that tell us? That tells us that in a rising rate inflationary environment, people are spending more for the stuff they need and saving less because their dollar is not stretching as far as it did before we went into this rising rate inflationary environment. That, coupled with looking at the balances, the credit card balances, that's the other critical metric that our loyal listeners will remember, because I talk about it a fair amount when I'm giving a macro view of things that we look at to try to monitor what the directionality is of consumer spending patterns, which of course gives us what the directionality is of the earnings of the stocks that we buy and sell and we talk about on this show. And it's not good. And I think it was reflected in the earnings from Macy's and the comments from Macy's CEO this morning that came out after the close last night. So I talked about it this morning on my SiriusXM radio show. Consumer discretionary demand is declining, continuing to decline. The question is, where are we in that process? I'm very concerned. Americans are traditionally really shitty when it comes to saving money. It's something we need to be teaching our kids from grade 1, but that's a topic for a whole other show. So not a good signal.
And what if you were, again, if you're an investor and you're listening to this show, Mark, what do you take from that in terms of what you do or don't want to do right now?
But
And by the way, does that mean less money is going to people are going to actually spend less on in the markets?
yeah, well, it means definitely, and you are already seeing that from the consumer discretionary perspective. So you got to be careful if you have existing consumer discretionary stocks in your portfolio, like a Macy's, right? Things that you don't have to spend money on today if you don't need to, and if you're feeling the pinch of inflation, which people clearly are. It's why the savings rates are being depleted as rapidly as they're being depleted. But my one, and I give this a disclaimer all the time, and it's a critical one. You got to understand where we are in the cycle. We're talking about lagging indicators. We talk about Macy's, talking about Q4, Christmas, sales, which were actually better than expected, holiday sales for Macy's. So where are we in the cycle? And I think we are, if we haven't turned, we're getting ready to turn that corner, because I think the American economy does remain strong, asserting Jay Powell and his progeny don't F it up and go too far with keeping their foot hawkishly pressed on the gas beyond where it needs to be.
So, Mark, you picked Rivian earlier in the week, and it slumped after its full year output forecast was like a quarter below estimates. My question is, one, what do you do with Rivian right now? But the bigger question is this is the EV market contracting? I mean, are EV vehicles still, they're more expensive, too much for people as we're heading into a recession? Or is this just a Rivian by itself? Or should Tesla be worried?
Yeah, I mean, look, so there's a lot of questions in that one question. I was disappointed in Rivian. I don't always get it right. You were being polite, by the way. Rivian got absolutely taken to the goddamn woodshed by the market on the very disappointing earnings reports. And at the end of the day, the two big issues for Rivian, they're related. One is they're spending $220,000 per car to make for a car they're selling for $80,000. So I may not be a math whiz, but I think that's a negative gross margin of 170%, right? So that with a dwindling balance sheet is not sustainable. I still think in terms of the potential competitors that are left out there, that Rivian is one of the ones that is probably poised and set up better than some of the other less well capitalized. But I think this is actually a good thing ultimately for Tesla. We remain Tesla bulls. Tesla, of course, getting absolutely taken 6% down when I looked just before we went on the air today. It's one of the reasons why our long position is protected with options, which is something we could talk about at another time. I don't know that it necessarily means contraction overall for the EV market. There's so much government tailwind for EVs under this administration that it's hard to get terribly sanguine on the outlook. You're definitely going to see, and I think similar to the kind of impacts on consumer spending and discretionary spending, do I need to spend $90,000 on a Tesla that's kind of the same size and performance as a Camry, although the Tesla's a hell of a lot faster, obviously. But I think people are, looking at that carefully. But the reality of it is, though, Rob, that the Tesla consumer demographic is less concerned about their declining amount of their discretionary spending. They tend to be a more affluent buyer.
What you're essentially saying is you're bullish on EVs no matter what, and that would mean bullish on the things behind EVs, right? Because there's EVs become a whole ecosystem of their own. If enough people have,
I need to ask Mark, does he have an EV?
No, I'm a petrol head.
Well, but that's a great question. Wait, last question on this. That's a great question, though. I think there's a lot of petrol heads. I also think there's a lot of people still, Mark, no matter what the push is, who would rather spend less on a car and even maybe prefer being able to go to a gas station because they're everywhere. So is a little of the EV market a longer term thing? Or, I mean,
Yeah.
are you looking at traditional automakers maybe a little more?
Yeah, well, I mean, look at what Ford reported yesterday. All right, I mean, 22% year over year. I mean, phenomenal. Ford's notwithstanding the fact the market didn't give it because of all of the volatility that we promised our listeners in the beginning of the week, and that one we absolutely delivered on, unfortunately. So I think the answer is yes, but at the end of the day, though, Rob, you had also caution against betting on the EV ecosystem. A lot of money has been lost on betting on the EV ecosystem and starting to get into, oh, I'm going to buy minerals, I'm going to buy lithium, I'm going to buy companies that extract lithium from waste products and all this other stuff. We do not have demand at scale yet. I think a lot of investors, both retail and professionals, jumped the shark a little bit with the EV infrastructure stuff. There are some outliers, companies like Plug Power that have actually done fairly well, and I think their earnings, if I remember correctly, they came in and met estimates when they reported the other day. We're, of course, coming to the end of Q4 earnings season tomorrow, Friday, mercifully. But I think you have to be cautious, and you have to look company by company. And I wouldn't recommend that our listeners go and start buying, the commodities that are associated with the EV overall marketplace, if you will, because they're subject to the slings and arrows of things outside of
Don't forget the masterful Marc's call on auto parts suppliers that had terrific earnings. And guess what? They're not catering to EV.
That's true. Although, we did Advance Auto Parts, which was my money where my mouth pick was from the beginning of the week on Monday, did exceed earnings expectations, coming in actually close to what our, sort of internal Battlefield whisper numbers were. But unfortunately, way too much market volatility for that party to last. If you bought it on Monday and you sold it at some point in time, Tuesday or Wednesday, you would have made around $3, $3.10 a share. But unfortunately, Advance not losing money, but essentially at the close here today on Thursday closing, this essentially where it started on the week. But we got it right. We got the earnings call right.
Take the profits. Take the
profits.
Right.
Hey, take the profits. My takeaway is don't, as much as we get excited about new tech, EV is a version of new tech, not the newest. A lot of things are happening, but be careful not to get ahead of your skis because then you don't get down the hill at all.
Yep. And in periods of volatility, by the way, when we talk about at the beginning of a week that we're expecting really serious chop, that means you got to take the profits even faster, right? Because the chop is going to take it away just as quickly as it gave it to you. So you have to be even more with a steady hand on the tiller when you have these kind of choppy markets.
Well, great conversation, you guys. I mean, a rough day with what's happening in crypto and Silvergate, but insightful and informative. And look, we take good news from the bad news or the best news we can. So Alex and Marc, great to see you both. And John, who's en route to Madrid. As always, great conversation with all of you.
This episode of Bulls, Bears, and Blockchain is proudly brought to you by Verijet, the only solution for short-haul private aviation. To learn more, go to verijet.com. Thanks for joining Rob Nelson, Alex Mascioli, Marc LoPresti, and John Najarian with another great episode of Bulls, Bears, and Blockchain, twice a week on Revolution Radio. Whether you're new to the world of Web3 finance or an experienced investor, we've got you covered. Follow us on Twitter at GetRevRadio and visit our website at revolutionradio.io, helping you make smarter financial decisions.